All right, Kimosabe here, giving you a little update on our higher high daily candle close and then the higher low that came in on Friday and a bunch of sideways over the weekend. So we are working on potentially putting in a higher low here on the daily for a push up. Maybe it starts an uptrend, maybe it doesn't. Invalidation. I think the invalidation here has to be 93,400. I wouldn't want to see that broken. I think, as I stated in the other video, if that's broken, you're likely going to chop down towards 90,000 and take out that liquidity. So we'll see how these daily candles close. What you may end up getting early on in the week is a flush down to take those liquidities again, but maybe close the daily candle remaining above this previous daily candle low at 95,600 or so. It's certainly something to watch for. As we have this range here, and we took the top side. Well, we took the bottom side, taking the top side, and maybe we just come back down and take the bottom side again. We'll see. But watch the daily candle closes. Where the daily is closing is letting you know where the trend is likely to be. So if this does close down in this area, then you're kind of closing in the lowest portion of the range that I kind of have placed in this box here and divided it up into 4 sections. On this move down, we haven't had any daily candle closures in that lowest quadrant. We've had wicks down there and they seem to be getting scooped up. So we want to see strength coming out of there, but there hasn't been much yet. But like I said, the trend has been down here locally, lower lows and lower highs on the daily until, was that last Thursday? Last Thursday closed a higher high than the previous highs. So now we're seeing if we can get a higher low and a higher high, and that would be a change of behavior on what's been going on here, and then you start something else. We'll zoom out here to the weekly chart. The weekly chart is still just chopping sideways, just taking liquidity. Let me take the volume off of here to clear up some space. And we can zoom in on our current weekly candle that closed as a doji, indecision again, indecision the week before, just expanding the liquidity. It's just taking liquidity up and down. But like we do with all of these weekly candles, basically just measure out the 50% mark of that. It's around about there, but you can do that on your chart and measure it with the Fibonacci measurements and get the exact 50%, but we'll just do this for sake of brevity. Roughly 98,000 would be 58 or 50% of the upper wick, whereas 94,700 would be the lower wick, 50% of the lower wick. So expect both of those areas to eventually be tested somehow, some way, and maybe even take out last week's low before potentially closing the daily on a strong move up. And the idea behind that, taking out the lows here at 94,300 or so, maybe all the way down to 93.3, is just the liquidity on the heat map. There's liquidations down there, and these liquidations on coin glass, they tend to get hit. All of those liquidation areas tend to get hit. So we might see a pop down early in the week and then pop back up. And that's what the market seems to go after, is liquidity. Here we're on the 4-hour chart looking where are they building liquidity, because they took all of these liquidities repeatedly, took this liquidity. Next liquidity up is above 100K. So there is liquidity up there. There's also, they're kind of building liquidity locally here at the 94.8 region. There are some liquidities down there. When price comes down and repeatedly hits a low, they're building up stop losses here to be able to take them out before reversing, and maybe even push those stop losses into previous stop losses. And maybe the market maker's idea is to get a cascade to come down and take out previous lows. We will see what they want to do. It depends on if they're filling their bags or not. But there was a change in behavior, a potential change in behavior here, where they're closing a higher high. So perhaps Monday we do get a shakedown, but then the daily closes back inside the range. That would suggest pushing up probably to the 102, 102 region, 103, and take all that upper liquidity. That could just be an Elliott wave ABC, and then you go down. That's if you take out the bottom first. That would just be like A, come on, A, getting down here, maybe going for a B, and then popping up for a C. And then you would repeat this upper leg, repeat this again into early March for that weekly cycle low, daily cycle low. So that's definitely something to watch out for, but there is liquidity up there. From an Elliott wave standpoint, that is a sell setup, 3 waves back. Stop loss would go at all-time highs, or you could wait for a rejection there and put the stop loss there, and then short it down to liquidity. And it would be counted something like this, like that would be A, all of this is just B, which would actually be a reaccumulation formation, and this would be your spring, moving down into first week of March or something like that, to 86,000, 85,000, something like that. And if you get a nice reaction off of that, that would be your spring, and then you'd expect a show of strength to go to all-time highs. In the larger context of that, this would be wave 5 happening. Our current all-time high would be wave 5 of the third wave, and now we're working on wave 4, which does kind of appear like a distribution, or at least they're trying to make it look like it. And just about any rally you've had in here has been met with very sharp selling, like we did on Friday. Personally, I'm not too convinced with the selling that's going on. This really does seem to be an algorithm that's driving this down. It seems to be like on very low time frames, it seems to be very persistent selling, like repeatedly, like robotically. It does not appear to be large market players trying to empty their positions, but the algorithms that are just selling it down, and somebody's been buying this up, or at least that's the way it looks like. It could be that they're just supporting the price during a last point of supply distribution phase where they're just supporting it at the lows and they keep bouncing it up and they're trying to exit before a markdown. But it usually doesn't happen like this quietly, I guess, is kind of my assessment. Anytime price goes quiet, it tends to be an accumulation. And we could zoom out to the daily to kind of illustrate that fact, is how price at the bear market lows appeared to go very, very slow and choppy and nothing happening. And then expansion came out of it. And kind of the same thing happened here. It went very low volatility and then expansion happens out of it. So whenever price is quiet like that and nothing's happening, that precedes acceleration in either direction, but it tends to be upward. Whereas the price action, if you're going down, it tends to just go. There's not much dilly-dallying around. Last time in 2021, you had the top, you had the lower low close, and price just wanted to go. Had a small little dead cat bounce, and price wanted to just go. Then you had your sideways of a potential reversal that got smacked down, but it didn't stay real quiet. This price action stayed real quiet in the summer of 2021. Price got real quiet, and then expansion came out of that. So just because nothing's happening currently doesn't mean that bull market over. We're in distribution. It's actually a good sign of accumulation when everything goes real quiet, real choppy, real sideways, real confusing, I would say. So to cut through the confusion, you really just have to look at the trend. The trend trumps all. It gives you the idea that, hey, something different is happening here. and we'll see if we can get something different happening down here. Whether that's take out the lows and still closing up here, then that wick just becomes noise. Just like this wick was noise. All of these wicks, all just noise. It's the closing price that matters. So if you have a higher high close, watch for a potential grab of liquidity and a higher low, then that becomes your stop loss. So if I get stopped out, I would look for the daily candle to come back up, and I would place a stop loss down there if that is the price action we're going to receive. And I'd be targeting upper liquidity and potentially a breakout. Also, often what you see during an accumulation phase is price is being accumulated and then sharp move down to get accumulated again. So the way the market maker is kind of doing it, or whales, or whoever's pushing the price, they're kind of sharply moving price down. So it looks like, well, I don't want to buy that. That looks like it's just going to keep going. Whereas then they just turn around and just kind of slowly mark it up over the weekend. And then the week opens and they put it as, they mark it down for a drop real quick to start the week off. And people think, oh, this is going to be a crappy week. When in actuality, you're just coming back down to this stupid trend line over and over if it wants to come down there. Take up those built up liquidations. It seems that the market or market participants are like trying to go max long at every bottom. I really don't understand it. Just every time you have a low and the price moves up, it's like, okay, max leverage, and I'll put my liquidation price down there instead of having an appropriate stop loss and appropriate risk management. They just say, well, my liquidation price is below there. That just doesn't make sense. It doesn't make sense the way my mind operates, I guess. I've never traded that way. And if you actually run through the math using a liquidation price as a stop loss, it actually costs you like 10%, because these exchanges will liquidate you before you would reach your stop loss. So say your liquidation price would be just under this low at say 92,800, you'd have a liquidation price, but you put a stop loss at 93.3, you would still maintain like 10% more of your capital before getting liquidated. You would actually walk away with something. So that shows the superiority of using an actual stop loss over a liquidation as your stop loss. So we'll see. We'll see what kind of price action we get. In this range, we're still in the kind of weaker portion of the range, but not at the lowest quadrant. But we do want to see some strength getting up into these areas. But I'd be cautious for a little ABC up fake out to 103 before undercutting the lows. So you may want to take a little bit of profit if you get a push up there, because there is liquidity. Take some off, raise your stop loss to break even, and see what kind of price action comes out of there. That was helpful. This uploaded, and you have a good night. Keep your stops tight.